Welcome to Countarts. In this lesson, we're going to be looking at some VAT calculations. We're going to take a look at grade 12 exam question papers and look at questions specifically on VAT. And this is the IEB question paper. So what do you have to remember when you're doing VAT calculation? Well, we've done a number of lessons on VAT calculations, and this is what we showed. When you have to calculate VAT, you have to remember whenever you look at an amount that is VAT exclusive, you should know that that amount is 100%. Now, if your VAT is at 15%, that means that the VAT inclusive amount will be 115%. So that is what you have to remember. And we did a thorough lesson on VAT inclusive and VAT exclusive. You'll find it in the link in the description below. But we're going to apply this principle, and you always have to remember whenever you're calculating VAT, VAT exclusive is 100%. VAT inclusive is 115%. Obviously, that's if your VAT is 15%. If your VAT is 16%, for instance, then your VAT inclusive will be 116%. But VAT exclusive will always be 100%. So let's take a look at some examples. The first one we have here is from the November 2020 grade 12 question paper. And here you are required to do some VAT calculations. So let's read what it says. It says here, Jacqueline Boisens, the owner of Win Limited, has decided to look at another business called Start to Finish Limited, which sells race t-shirts to race organizers. Due to the nature of this business, 90% of the sales are done on credit and they allow 60-day interest-free payment terms. The business is a registered VAT vendor and uses the invoice basis to record VAT, which is charged at 15%. They are required to pay VAT every 2 months. So it's very important, as we note here, the business is a VAT vendor. That means VAT is applicable. They can charge VAT and they can claim VAT from the Revenue Authority. Now we have transactions 1 to 5, and we are told here to calculate the applicable VAT amount per transaction and then clearly state if this will increase or decrease the opening balance given. So what is the opening balance given? As you can see down here, we're given the opening balance of 33,050 Rand, and it's debit. Very important. When is it debit and when is it credit? Well, if it's VAT input or if it's VAT that is due to you as the business from the Revenue Authority, then there is VAT input and it goes on the debit side. If it's VAT output, what you have to pay to the Revenue Authority, it goes on the credit side. So what you see here as the 33,050 Rand that is debit, that means that that money is due to the business. The business can claim it back from the Revenue Authority, and the first one has been completed, as you can see here. So let's start with the second one. It says here, you must also account for the VAT on cash sales. Account for the VAT on cash sales. So let's first get our cash sales. What are we told? Well, we are told that due to the nature of the business, 90% of sales are done on credit and they allow 60-day interest-free payment terms. That means if 90% is on credit, then the remaining 10% is on cash. So let's look at what amounts we are given. Number one says credit sales for the month of June 2020 totaled 75,900 Rand VAT inclusive. So if they told us it's VAT inclusive and we were told that VAT is charged at 15%, obviously this 75,900 Rand is 115%. So what is our cash sale? Well, we know that the credit sales is 75,900 Rand and we know that 90% of the sales are on credit. So that means this 75,900 Rand is 90%. So I want 10%, and remember it's not the 10% of 90%, it's 10% of 100%. So how are we going to calculate that? Well, we're going to take 75,900 Rand, we multiply that by what we want. What do we want? We want the 10%, and we divide that by the percentage that this 75,900 is, and it's 90%. So this is how it's going to look. 75,900 Rand times 10 divided by 90, and then once we have that answer, we multiply it by 15% because that's the VAT that we are calculating, divided by the 115% because this 75,900 Rand is VAT inclusive, and it gives us an amount of 1,100 Rand. Now, will it increase or decrease the opening balance? Well, whenever we make a sale, that is always going to be VAT output, okay? Because when we make a sale and we are a VAT vendor, we charge VAT on those sales. That means that when we receive the money from the customer, or even if we haven't received the money from the customer, we have charged VAT on it and we are due to receive that money from the customer. And the VAT portion, we have to take it and pay it over to the revenue authority. So that means it will decrease our VAT input, because remember the opening balance, as I mentioned, it's written debit. That means it's VAT input. That means it's going to decrease it, because VAT input is what is due to us. But now we have 1,100 that is due to the revenue authority. So it's going to decrease the VAT input. I hope it has made sense. Also with this calculation here, the first thing that we had to calculate is the cash sale, and that is why we took 75,900 times 10 divided by 90. Why divide by 90? Well, because we're given the 90%. We're told that these are the credit sales, and we're told credit sales are 90%. If you'd like to understand more on doing this kind of calculation, what you want divided by what you have, we have done a specific lesson on that one. You'll find it as well in the link in the description below, where we gave a simple formula to be able to do such calculations, and it will help you with any percentage calculation you'd want to calculate. So once we've done that, we obviously multiply it by 15%, because that's what we want, and we divide that by what we have, and what we have is 115%. That's why I showed that table in the first slide, where we have to understand that VAT exclusive is 100%, but VAT inclusive is 115% in this case, because VAT is at 15%. That means whenever they give you an amount VAT inclusive, your denominator is always going to be 115%. All right, let's continue. Number 3 says that the total credit purchases amounted to 2,070 Rand VAT inclusive. T-shirts to the value of 360 Rand VAT exclusive were sent back to the supplier. So there are two here. We have got 3A and 3B, as you can see from the answer book here. So how did they get the 270, by the way? Well, they took the 2,070 Rand and they multiplied that by 15 and they divided it by 115%, because it was VAT inclusive. I hope it's getting clearer now. Whenever it's VAT inclusive, like I said, your denominator will always be 115%. So that's how they got the 270 Rand. Now we have to calculate 3B, which is the 360 Rand. And by the way, the 370 Rand, is it decreasing or is it increasing the VAT input that we had at the beginning? Well, think about it. These were the purchases that we made. Whenever we purchase goods from our supplier, that means they charge us VAT and we have to pay them with VAT, and then we go to the revenue authority and claim that money back. So whenever we purchase, we claim from the revenue authority, that is VAT input. So it's going to increase our opening balance. So we'll put the increase. I hope it's made sense. And then T-shirts to the value of 360 Rand were sent back to the supplier. Firstly, is it going to increase or decrease our VAT input or our opening balance? Well, it's going to decrease it, because when we return goods back to our supplier, that means we don't have to pay them the VAT for those goods, or they will have to refund us if we've paid them already for those goods. That means that we can't claim from the revenue authority. We have to reverse that VAT input. I hope it's making sense. Whenever you return goods to the supplier, you reverse the VAT input, it becomes VAT output. So it's going to decrease our opening balance. So let's calculate the amount here. We're given 360 Rand and we're told that it's VAT exclusive. That means that this 360 Rand is 100% and not 115%. That means our denominator is going to be 100%. So for us to get VAT, we take 360 Rand times 15 divided by 100, right? Because it's VAT exclusive, and that gives us an amount of 54 Rand. And like I said, it's decreasing our VAT input or our opening balance. Let's look at number 4. A debtor A. Spears, who bought goods in March 2018 for 1,200 Rand VAT exclusive, has still not paid his account. It has been decided that his debt will be written off. Okay, so what is happening here? A debtor, we sold goods to him, and obviously he bought goods on credit because it's a debtor who owes us money, but then it has been decided that his debt will be written off because he has still not paid his account. That means that we're not going to receive that money, including VAT, anymore. So on the day that we sold these goods to him, we recorded VAT output. Remember, whenever you sell, you record VAT output, meaning you're selling, and then when you receive the VAT output, you take it to the revenue authority. So we recorded VAT output. But now that we are writing it off because it's no longer going to pay us, or his debt is written off, that means that it's going to be VAT input, all right? Because if he can't pay you anymore, you're not gonna pay the revenue authority for that particular amount. So you have to record what is called VAT input. So whenever you're writing off a debtor's amount, you record VAT input, because initially when you sold to him, you recorded VAT output. Now you're reversing it to say it's not paying us anymore, so we don't owe the revenue authority for this particular transaction. So we take the 1,200, and remember it's VAT exclusive, so our denominator is going to be 100%. So it's 1,200 rand times 15 divided by 100, and it gives us 180 rand. And like we said, it's increasing our opening balance or our VAT input, because this is also VAT input, because we're not receiving the money anymore from our debtor. Right, let's look at the last one. Start to Finish Limited settled their account with Miles Smile Limited, a creditor, and were rewarded with a 690 Rand discount. Now, who is Start to Finish? It's very important, by the way. In any question that you're going to be dealing with in your entire paper, you see and you take note of who you are as the company, and you know that you're going to look at every transaction from that specific perspective. So here we're told that the owner of Win Limited has decided to look at another business called Start to Finish Limited, which sells race t-shirts to race organizers. So obviously we would be Start to Finish Limited, and that means we are the ones who are settling the account with Miles Smile Limited, which is our creditor. All right, and we are rewarded with a 690 Rand discount. Now, whenever you are rewarded with a discount, or whenever you are given a discount, there is an income. All right, and if it's an income, we have VAT output, because we are receiving an income, although we are not receiving the money per se, but we are gaining this 690 Rand as an income, because this 690 won't be paid by us anymore, because it's a discount we're given. That means we owe the revenue authority for this 690 Rand. So it's going to be VAT output. Okay, so that means obviously it's going to decrease our VAT input or our opening balance. So we're going to calculate the VAT on this discount. It's 690 Rand times 15 divided by 115%. Remember, this is discount and it's got VAT in it whenever you're given the discount, unless you're specifically told that the discount is VAT exclusive, but it usually is VAT inclusive if they do not mention it. So I'm going to take the 690 Rand times 15 divided by 115, and it's going to give us an amount of 90 Rand. And like we said, it's decreasing our VAT input or opening balance. I hope it's made sense. We've just completed this section where we had to do a VAT calculation. I hope you now know how to deal with VAT input and VAT output. What we're going to do now is to look at the November 2019 question paper and look at that particular section where we have to calculate VAT. And here it is. We're given part B, and we're told that the business is a registered VAT vendor and uses the invoice basis to record VAT, which is charged at 15%. They are required to pay VAT every 2 months. They have not completed their calculation of the VAT due to or owed by SARS for the month of 28 February 2019, because the bookkeeper is unsure of how to deal with the following VAT entries. And here you can see from the answer book, we are asked to show how the VAT control account will be affected by the transactions relating to the company. You are required to only fill in amounts under either the debit or credit columns. Calculate how much is owed to or owed by SARS and show your selection by circling the correct block. Now, here we're told to only fill in amounts and not show anything else. So if it's VAT output or what we have to pay to the revenue authority, obviously it's a liability. Like VAT output is a liability. So we record it on the credit side. And if it's VAT input, we record it on the debit side. And remember, here they wanted the amount only. So it's not the normal VAT control where you have to show the dates and the details as well. So we're just going to put the amounts as they've asked us to. So let's look at the first one here. We're told that the VAT control account had a balance of 23,250 Rand due to SARS on the 1st of February 2019. Okay, so if it's due to SARS, that's VAT output, we put it on the credit side. Whatever is due to SARS goes on the credit side. So we're going to put the 23,250 Rand on the credit side. Let's look at the second one. Cash sales for the month of February totaled 469,200 Rand, VAT inclusive. All right, so here we have made a sale. And remember, I said if you're a VAT vendor and you make a sale, you have to pay the VAT portion to the revenue authority. So we're going to take the 469,200 Rand multiplied by 15 divided by 115%, because it's VAT inclusive, and VAT inclusive is 115%, so our denominator is 115, and it gives us an answer of 61,200 rand. Easy enough. And remember, it's VAT output because we owe this money to the Revenue Authority because it was a sale. Now, let's look at the third one. The total credit purchases amounted to 14,950 rand, VAT inclusive. 6,000 rand worth of raw materials, VAT exclusive, was sent back to the supplier. So here we were purchasing and it amounted to 14,950 rand, VAT inclusive. So let's deal with that one first. Whenever we make a purchase, we have to pay the amount including VAT. So that is VAT input because we're going to claim the VAT portion back from the Revenue Authority. So it's going to go on the debit side. So we're going to take the 14,950 rand multiplied by 15 and we divide it by 115 because it's VAT inclusive, and it gives us an answer of 1,950 rand. Now what I'd like you to do here is to pause the lesson and try and attempt the rest of the questions, and then once you're done you can continue the lesson and see how well you have understood what we've been looking at from the beginning. So go ahead and do that, which will help you understand it much better than just following along. Alright, I hope you've attempted all the questions. So let's continue. We have to do the second portion of bullet point number 3. 6,000 rand worth of raw materials, VAT exclusive, was sent back to the supplier. And we saw something similar in the previous example we looked at, where you're returning something to your supplier. And if you are returning something to your supplier, it's VAT output, because initially when you bought it from your supplier, you recorded VAT input. But now that you are returning it, since you're not going to pay the supplier that amount anymore, you have to reverse it and it becomes VAT output. Alright, so it's going to be 6,000 rand times 15 divided by 100 this time because it's VAT exclusive, and it gives us an answer of 900 rand. And like I said, it's VAT output, so it goes on the credit side. The fourth bullet point tells us that a debtor, C. de Villiers, who bought goods on May 2018 for 11,720 rand, VAT exclusive, has still not paid his account. It has been decided that his debt will be written off. This should be quite easy, especially if you saw our first example. We had something very similar to this as well. So we take the 11,720 rand multiplied by 15 and we divide it by 100 because it's VAT exclusive, and it will give us our answer. And which side does it go, debit or credit? Well, I hope you attempted the question and you got it correctly by putting it on the debit side, because initially when we sold we recorded VAT output because it was a sale, but now that his debt is written off, we put it on the debit side because it has become VAT input, or we're reversing it. So it's 11,720 times 15 divided by 100, and it gives us 1,758 rand. Alright, let's look at bullet point number 5. Discount of 115 rand, VAT inclusive, granted to G Gearing. A debtor has been cancelled as his check for 815 rand has been rejected by the bank. So here we gave a discount to a debtor, but now we are cancelling that discount because his check has been rejected. So we have to account for the VAT on that particular discount. Remember, when we issue a discount, that is an expense for us as a company, so it's VAT input. But whenever we are cancelling the discount we have issued, we have to take it to the opposite side, which is VAT output, meaning the credit side. So it's going to be 115 rand multiplied by 15, and we divide it by 115 because it's VAT inclusive, and it gives us an answer of 15 rand. Alright, that is all we had to do. The 815 rand we are not dealing with because it's money that we're actually receiving. So if we are receiving this money, we already accounted for it when we made the sale. Remember, here we are told that the company uses the invoice basis to record VAT. So that means on the day that we wrote the invoice, we accounted for the VAT on the sale to G Gearing. So that's why we're not concerned with the 850 rand, because it's already been accounted for previously. I hope it's made sense, and I hope you now know how to do this one. So what do we do? Do we owe SARS, or does SARS owe us? Well, you just have to total up your credit side and total up your debit side. If your credit side is bigger, that means you owe SARS. If your debit side is bigger, that means SARS owes the money to you. So you just have to total up credit and you total up the debit, and you take the bigger side minus the smaller side, and it will tell you the amount that you owe to SARS or SARS owes you. And just by looking at the amounts, obviously you can see that the credit side is bigger because it's got bigger amounts. That means we definitely owe the amount to SARS. But how much do we owe to SARS? Well, we take the total of the credit side minus the total of the debit side, and it gives us an answer of 81,657 rand. That means the credit side is bigger than the debit side by 81,657,000 rand, and we owe the amount to SARS. because the credit side is bigger. So that's what you do. You just compare the two sides and then take the bigger side minus the smaller side. If the credit is the bigger side, you owe SARS. If the debit was the bigger side, then SARS would owe the amount to the company. I hope it's made sense. I hope you now know how to do VAT calculations when you're faced with such questions. And if you've gained value from this lesson, consider subscribing to our channel, like this video, and share it to those you think it might help. We also offer one-on-one lessons at reasonable rates. To find out more, you can find our contact details in the description below, as well as the link to our website where you'll find all our services that we provide as well. Till next time, cheers.